According to the U.S. Department of Agriculture, farms owned by institutional investors are now responsible for over 12% of America's total food production. That number may not seem huge, but the value of farmland investments has more than doubled since 2020. One major player in this trend is Cascade Investment, a firm that manages assets exclusively for Bill Gates and his ex-wife, Melinda. This firm owns a 71% stake in the Four Seasons hotel chain and 14% of the Canadian National Railway, and it also holds ownership of around 250,000 acres of U.S. farmland. The land is technically owned through several smaller holding companies. When asked why they've acquired so much farmland, Cascade's explanation was simple: it's just a solid investment. While many sources claim that this makes Bill Gates the biggest landowner in the country, that's not accurate. He is far from the top. Other billionaires and investment firms have spent the past 2 decades buying up farmland, and some own far more than Gates. For example, John Malone holds 2.2 million acres and is currently the largest private landowner in the United States. So why are investors pouring money into cornfields and farms across the country? Critics argue that these purchases push out small family farmers, while supporters claim they are helping stabilize the agricultural market. Traditionally, farms have been run by families who own and work their land themselves. Even though financial investors are increasing their farmland holdings, most farming is still done this way. However, the full picture is more complex. According to the USDA's Economic Research Service, just over 60% of farmland is owner-operated, while the rest is rented. But even owner-operators can be institutional investors. Likewise, families sometimes lease their land to others because they can't farm it efficiently, don't own enough to scale operations, or prefer rental income over active labor. These rental arrangements can vary widely, from informal agreements between neighbors to legally binding contracts involving corporate attorneys. It's also tough to track how much farmland is treated as a financial asset, because even small farms are usually incorporated as businesses. This makes them appear similar on paper to massive commercial operations owned by family offices in major cities. These dynamics are exactly what's made farming so attractive to large-scale investors. There are 4 main reasons why farmland is appealing to investors. The first is scalability. Farming becomes more efficient as operations grow. A small 100-acre family farm and a 10,000-acre commercial farm often face similar fixed costs, but the larger farm can spread those costs out more effectively. Bigger farms also get better deals on essentials like seeds, fertilizer, equipment, fuel, and labor. They even qualify for better loan terms since large-scale borrowers are more appealing to lenders. USDA data shows that only 10% of small family farms have operating profit margins above 25%, and even those margins have shrunk over the past decade. Many families who run their farms themselves are earning less than minimum wage after expenses. The response from Wall Street has been to buy up many small, less efficient farms and consolidate them into large-scale operations with better margins. The number of individual farms in the U.S. has been dropping since the Great Depression, but total farmland acreage has stayed the same. That means farms are getting larger. While this shift doesn't automatically mean something bad, it does bring big changes. Larger farms often have more capital to invest in technology, but small farms usually can't afford these upgrades. A fully automated system can boost farm returns significantly, but buying the equipment can cost at least $350,000, even used. For most family farms, this kind of investment would mean going deeper into debt. On the other hand, investment firms are willing to spend the money if it means higher returns. This is a classic private equity strategy. Combine many small businesses into one efficient operation with shared overhead. This approach could lead to lower food prices through better technology or simply more profit for investors. But farmland isn't just attractive because of optimization. It's also a unique combination of real estate and business, making it ideal for leveraged buyouts. An investor with $100 million could buy one large farm outright or use it as a down payment to buy 5 farms, borrowing the rest. The farm's income would cover the debt, and if land values rise, the investor sees a much larger return. If one farm fails, it only impacts a portion of the investment, not the entire amount. This gives large investors a serious edge over traditional family farmers. This advantage has accelerated the trend of big money flowing into farmland. According to USDA data, farmland values have reached all-time highs, nearly doubling from the highs of the 1980s, even after adjusting for inflation. Meanwhile, farming itself has become harder. Droughts, rising chemical costs, restrictive water rights, monopolized farm equipment, and tougher borrowing conditions have all squeezed small farmers. Tractors and other equipment often break down, and in many cases, farmers aren't even allowed to fix them themselves. While farm bankruptcies have declined since 2019, that's largely due to government support and low interest rates. As those supports shrink and interest rates rise, many farmers are finding it hard to stay afloat. According to Time magazine, over half of all farmers lost money every year since 2013. With razor-thin margins and record-high land values, many are being forced or choosing to sell. The image of proud family farmers giving up their land to corporations or billionaires is difficult to stomach, but it reflects a broader trend in American business. Farming is only now catching up to a shift that other industries experienced decades ago. Larger operations are more efficient and more profitable. Even pasture land, used mainly for grazing livestock and less valuable than cropland, has seen faster value growth. This kind of land makes up most of the holdings of America's largest landowners, like the Emerson family, who own 2.4 million acres for lumber. Bill Gates, with 275,000 acres, is only the 42nd largest private landowner. He's even behind Jeff Bezos, who owns 420,000 acres. But beyond strategy and economics, farmland has become a status symbol. As prices rise, billionaires and investment funds don't want to miss out. It's like crypto. But instead of doing nothing, it feeds the country. For many, owning farmland is simply about seeing the number go up. And the more money flows into farmland, the more prices rise, pulling in even more investors. The result is less control for small farmers and more for the few who own the land. This consolidation could reshape agriculture as we know it. Thanks for watching InvestingFlix. If you found this video helpful, don't forget to like, share, and drop a comment below. For more expert insights on personal finance, investing, and wealth building, hit that subscribe button and turn on notifications so you never miss out.